Welcome to Investors Insights, where today's topic is international pressure. Thank you so much for joining us today. I've got Adam Van Zant here with me. We had a really good conversation this morning about what is moving the markets. We chose the topic international pressure because the week is starting today on a down note in the U.S. markets, and largely driven by negative news out of China. One of the largest retail developers in China is looking at potential bankruptcy. And why this may be impactful today on global markets is because it's a $300 billion worth of debt company. And that is a lot of debt to default. However, almost all of that is centered in China. So why are our markets down? Well, the Chinese markets and the Japanese markets are both closed today for holidays. So when you can't sell what you want to sell, you sell what you can sell. And so we may be seeing some contagion this morning where a lot of Chinese investors really just want to de-risk their portfolios, and that's pushing our markets lower. That may be a good thing because that means it might not last past today when we see Chinese markets reopen later in the week. And so while looking at the international markets are really driving our markets today, looking forward, what Adam really brought to the table this morning was some information on where our support is right now in the U.S. markets with things falling down. We really want to focus on where's our strength? What would stop this fall in the markets? Adam, you had some really good points this morning.
I appreciate it, Trey. And so we saw a lot of volatility continue in the markets last week with the S&P 500 close on Friday of 4,432. That pushes our new resistance level to 4,460 with a new support level of 4,400. We're also seeing a 100-day moving average of 4,326. Of course, over the last month, we've kind of talked about the support level for the end of the year. Now you're seeing that 100-day moving average kind of hover right around that line. So that's the number to look at, from now to the end of the year and see if we can keep that or hold that. If we go under that and it stays under, that might be a point where we start to see the bears come out.
Yeah, absolutely. Holding that support is very important, especially when you see markets fall. It builds context of how we're really not falling that far. It just feels like the market is down a good bit, but we're not even back to the average of the last 100 days. So it's a really good point to look at, Adam. And then, we're looking also from a fundamental standpoint, what may drive the support? Where are we seeing the strength in the fundamental part of the market, Adam?
Thanks, Trey. So you alluded earlier to international pressure. So from a domestic standpoint, we're actually seeing some good numbers from the consumer. So retail sales were up 0.7% for August. That includes a 15.1% year over year gain. In addition to that, we're seeing a lot of online sales. So the boost for the retail sales mostly came from online, pushing up 5.3%.
Yeah, and that kind of information is very important as the Federal Reserve meets this week. That's something we're focusing on domestically. But the Fed doesn't just look at the U.S. economy. The Fed looks at the global economy. So it'll be interesting to hear what they think. As we've seen the global economy, not just in China, but also in Europe with higher energy prices in Europe, really starting to slow down the global economy while the U.S. economy remains strong. Like you pointed out, the U.S. consumer is very strong. You can see on this chart that we actually have north of 10 million job openings. Compare that to roughly 5 million unemployed individuals. The Fed may be looking at the U.S. economy as creating plenty of jobs. It's just currently we don't have the training, or maybe individuals aren't taking up the jobs at the rate. It takes a long time to employ 5 million people. So the U.S. economy, it may be creating enough jobs to support the Fed tightening, which the market would definitely be would definitely take pause and note of that. And so will the Fed mention any of this international uncertainty as they meet over the next few days this week to come out with a decision that will be very market impactful, not just in the U.S. but globally. And so something to watch for. We've got a strong U.S. consumer, what appears to be a strong U.S. job market, but a lot of weakness coming up internationally. So I hope this has been helpful. Please, we appreciate it whenever you share this information with friends and family. Always follow us on Facebook, LinkedIn, and Twitter. I hope you have a great week. Please don't hesitate to call us if you have any questions.